Hey there, investors. Welcome back to another deep dive into the world of stocks and finance. Today we're focusing on Palantir, the data analytics company that's been making waves in the tech and finance sectors. If you haven't been following Palantir, you're in for a treat. This company has been at the forefront of data analytics, providing cutting-edge solutions to both commercial and government clients. 2023 has been a wild ride for Palantir stock, ticker symbol PLTR. The stock has seen some incredible highs and some nerve-wracking lows, making it one of the most talked-about stocks of the year. It's skyrocketed over 120%. That's right, folks, a massive surge that had investors buzzing with excitement. The stock's meteoric rise was fueled by the company's advancements in artificial intelligence and big data analytics, sectors that are seeing explosive growth. Investors were piling in, hoping to cash in on the AI boom. The excitement was palpable, with many seeing Palantir as a key player in the future of technology and data management. The company's innovative approach and strategic partnerships have positioned it as a leader in the industry. But hold on, Raymond James just hit the brakes with a downgrade. What's going on? This unexpected move has sent shockwaves through the investor community. Raymond James cited concerns over valuation and potential headwinds in the market, causing many to reevaluate their positions. This sudden shift has left many scratching their heads. Investors are now questioning whether Palantir can sustain its growth or if the stock is due for a correction. The downgrade has introduced a new level of uncertainty, making it crucial to dig deeper into the company's fundamentals. Is Palantir still a hot buy, or is this the beginning of a downward spiral? The market is divided, with some analysts remaining bullish on the stock's long-term prospects, while others are more cautious. It's a classic case of bulls versus bears, and the outcome is far from certain. Fear not, because we're diving deep into the numbers, the news, and the expert opinions to help you make sense of it all. We'll examine the factors driving Palantir's performance, the potential risks, and what the future might hold for this intriguing stock. Buckle up, because we're about to explore the exciting world of Palantir, where artificial intelligence meets big data and government contracts. Palantir's unique position in the market, its innovative technology, and its strategic alliances make it a fascinating company to watch. Get ready for a wild ride. The journey of Palantir is far from over, and whether you're an investor, a tech enthusiast, or just curious about the future of data analytics, there's plenty to keep an eye on. Stay tuned as we unravel the complexities and opportunities that lie ahead for Palantir. So why was Palantir stock soaring in the first place? Two words: artificial intelligence. Palantir's software is all about crunching massive amounts of data to find patterns and insights. It's like having a superpowered detective on your team. Governments and businesses are lining up to get their hands on this technology. And that's not all. Palantir has been winning big government contracts, especially in defense and intelligence. These contracts are worth billions, folks. Investors saw dollar signs and jumped on board, driving the stock price through the roof. But as with any high-flying stock, the question remains, can Palantir maintain this momentum? Just when things were looking rosy, the stock market was buzzing with optimism, and investors were riding high on a wave of positive sentiment. Raymond James, a well-respected investment firm known for its meticulous analysis and cautious approach, threw cold water on the Palantir party. Their unexpected move sent ripples through the market. They downgraded the stock, citing concerns about the company's future growth prospects. This decision was not made lightly, and was based on a thorough examination of various factors. Essentially, they're saying Palantir's valuation may have gotten ahead of itself. The stock price had soared to levels that seemed unsustainable given the current and projected performance metrics. Raymond James argues that, while Palantir's AI technology is impressive and has significant potential, it might not be enough to justify its sky-high stock price. The firm believes that the market may be overestimating the immediate impact of Palantir's innovations. They're worried about increasing competition in the data analytics space. With numerous companies entering the field, the competitive landscape is becoming more crowded, which could impact Palantir's market share and profitability. Plus, relying heavily on government contracts can be risky. While these contracts provide substantial revenue, they are also subject to political and budgetary changes that can be unpredictable. What happens if those contracts dry up? The potential loss of government contracts could significantly impact Palantir's financial stability and growth trajectory. This downgrade serves as a reality check for investors caught up in the hype. It reminds them to look beyond the surface and consider the underlying fundamentals and risks associated with their investments. It's a reminder that even the most promising companies can stumble. No matter how innovative or successful a company appears, it is not immune to market forces and competitive pressures. Investors must remain vigilant and informed to navigate the complexities of the stock market. In conclusion, while Palantir remains a strong player in the AI and data analytics space, the Downgrade by Raymond James highlights the importance of cautious optimism. Investors should balance their enthusiasm with a critical assessment of potential risks and challenges. By staying informed and making well-researched decisions, investors can better position themselves to weather market fluctuations and capitalize on long-term opportunities. The stock market is a dynamic and ever-changing environment, and staying ahead requires both knowledge and adaptability. As the situation with Palantir unfolds, it will be interesting to see how the company addresses these concerns and continues to innovate in a competitive landscape. Valuation vertigo. Is Palantir's price tag justified? Here's the million-dollar question. Is Palantir's stock price justified by its actual performance? The company is growing, no doubt, but it's not yet consistently profitable. That's right, they're still in the red. Some investors believe Palantir's future potential is enormous. They argue that the company is on the verge of revolutionizing how we use data. Others are more cautious, pointing to the lack of profits and the intense competition in the tech world. This is where things get tricky. Investing in high-growth tech companies often involves betting on future potential, not just current performance. But how much are you willing to bet? Wall Street's mixed signals, bulls versus bears. The Raymond James downgrade has sparked a debate on Wall Street. Some analysts remain bullish on Palantir, believing the company is well-positioned to dominate the AI landscape. They point to Palantir's impressive technology, its growing customer base, and its strong government ties. On the other side, the bears are growling louder. They argue that Palantir's valuation is unsustainable, its reliance on government contracts is risky, and its path to profitability is unclear. They see the recent downgrade as a sign of trouble ahead. So who's right? It's tough to say for sure. That's the stock market for you, a constant battle between optimism and pessimism. The investor's dilemma, to hold or to fold? Now comes the tough part for investors. What should you do with your Palantir stock? This is a question that many investors grapple with, especially when the market is as volatile as it is today. The decision isn't just about numbers, it's about understanding the broader market trends and the specific trajectory of the company. If you bought in early and rode the wave up, you're sitting on some nice gains. It's a great feeling to see your investment grow, but it also brings a new set of challenges. The gains you've made are real, but they are also on paper. The market can be unpredictable, and those gains can disappear just as quickly as they appeared. But is it time to cash out and lock in your profits? This is the classic investor's dilemma. On one hand, taking your profits now can provide a sense of security and accomplishment. On the other hand, selling too early might mean missing out on future gains. It's a delicate balance that requires careful consideration. Or do you hold on, believing that Palantir's best days are yet to come? Many investors believe in the long-term potential of the company. They see the investments in technology and the strategic partnerships as signs of future growth. Holding on to your stock could mean reaping even greater rewards down the line. The company is certainly not backing down. Palantir continues to push forward with ambitious plans and innovative solutions. Their commitment to growth and development is evident in their actions and strategies. They're investing heavily in research and development, expanding into new markets and forging strategic partnerships. These moves are designed to position the company for long-term success. By staying ahead of the curve, Palantir aims to maintain its competitive edge and continue its upward trajectory. The decision ultimately comes down to your risk tolerance and your investment timeline. Every investor has a different threshold for risk and a unique financial goal. Understanding your own comfort level with market fluctuations is crucial in making an informed decision. Are you comfortable with high-growth, high-volatility stocks, which can offer substantial rewards but also come with significant risks? These stocks can be exciting and potentially very profitable, but they require a strong stomach and a long-term perspective. Or do you prefer more stable investments? Stability can provide peace of mind and a more predictable return on investment. It's about finding the right balance that aligns with your financial goals and personal comfort level. Only you can answer that question. It's a deeply personal decision that requires introspection and a clear understanding of your financial objectives. Take the time to evaluate your options, consider the potential risks and rewards, and make the choice that feels right for you.